Okay, so for those of you that don't know us, Aquila is a development stage company. We operate in the Great Lakes region, specifically the Upper Peninsula of Michigan and northern Wisconsin. We're on what's called the Pinokian VMS belt. We actually own 3 assets on this belt, 2 in Wisconsin, 1 in Michigan. Our flagship project is called the Back 40. It's 100% owned by Aquila. We bought the asset back from Hud Bay back in the early part of 2014. After we reacquired the asset, just a little bit of history, put a new mine plan together, we recapitalized the company, and we've now completed permitting of the project. And last year we put out a feasibility study, an open pit feasibility study on the project. We do have what we believe is favorable metal exposure. There's actually 5 metals present in the ore body, but the majority of which is gold and zinc. 82% of the payable metal is in gold and zinc, and they're pretty much evenly split, 41 and 41, right down the middle. It's in a well-established and safe jurisdiction. Michigan actually passed new mining law back in 2005, 2006 called Part 632, and they've permitted 3 mines, one of which is operating, which is the Eagle Mine, which is owned by Lundin, since that time. So very progressive mining jurisdiction. Again, very mining friendly. We think it's having a bit of a resurgence right now. And incidentally, Wisconsin, where our other 2 projects are, again on the same Pinokian belt, just passed new mining law in 2017. They passed what they call the Mining for America Act, and it was a bipartisan effort. They want to see mining investment come back to northern Wisconsin. Again, we require 4 permits to build and operate Back 40. We've received all 4 of those permits. They're actually state issued. So Michigan is a unique state in the U.S. in that for a wetlands permit, or what's typically a 404 permit, which is required in the U.S., it's a federal permit. You have to get it from the Army Corps of Engineers. Michigan and New Jersey are the only 2 states that have delegated authority to issue their own 404 permit. It's actually called a 303 permit. So it compresses the timeline a little bit, makes it a little bit easier in that you're dealing with one regulatory authority. With respect to the 404 permit, though, the EPA does get a 90-day review of your permit. Well-funded, we have a strong shareholder base. 3 shareholders control a little better than 50% of the shares, and a lot of exploration upside. We think there's exploration upside at Back 40. It's open at depth. We certainly have a lot of drilling to be done there, and then obviously we have the 2 other assets on the same belt. Just to quickly cover off the capital structure, we have about 338 million shares outstanding, trading up and down around the 20-cent range, so 65 to 70 million Canadian market cap. As of March 31st, we had almost 12 million US in the bank. That was our last reporting period. We do have a gold stream outstanding with Osisko, and we're still owed $40 million in cash under that gold stream from Osisko. Major shareholders, Orion owns 28.7%. They actually just recently acquired Osisko Gold Royalties equity position in Aquila, so that almost doubled their position to 29%. Ruffer LLP, which is a UK-based institution, got about 40 billion under management, own 13%, and Hud Bay still owns 10.5% of the company. So just this is a map, shows you where we're at. This sort of yellowish blob in the middle is what we call the Pinokian VMS belt. Again, a very prolific belt that spans the Upper Peninsula of Michigan down through northern Wisconsin. There's about 24 known mineral occurrences currently on this belt. It's relatively underexplored. It's actually only had 1 operating mine, which is called the Flambeau Mine, which is shown on the map there. It was owned by Kennecott, and it was closed and reclaimed in 1995. But that's the only operating mine on the belt. Similar shape and size, similar geology to Flin Flon. Again, up until 2017, before Wisconsin passed their new mining laws, they had a mining moratorium in place in Wisconsin, so was not perceived to be a very friendly mining jurisdiction. but again, the winds are changing quite significantly in Wisconsin as we speak. Again, we completed a feasibility study on Back 40. This was on the open pit only, so this is an open pit operation that'll be followed by an underground mine. The open pit is close to 12 million tons, and you can see that the economics were quite strong. Again, this is on the open pit only, and the payback period was 2.2 years. One of the reasons why the payback is so quick, based on a $294 million capex in the feasibility study, is because there's 2 high-grade gold gossans at surface within the pit. You mine those in the first 2 or 3 years. You generate a lot of revenue associated with that gold. So we think the project will carry debt very well because of that early gold production. Just looking again at the revenue stream, the revenue by metal over on the right-hand side there, 82% coming from gold and zinc, and again evenly split between the two, 10% copper, 6% silver, and a little bit of lead. You can see if you look at it by product, we'll produce 3 concentrates, a copper con, a zinc con, and a lead con, and then there's a gold, silver, doré that we'll produce as well. You can see even though copper only constitutes 10% of the payable metal, it represents about 31% of the product revenue, and that's because on the sulfides, we do a lot of our gold reports to the copper concentrate. Okay, so that copper concentrate has high PM quantities. This is just a slide. This is right out of the feasibility study, actually. Shows the leverage to certain commodity prices. You can see biggest bang for the buck is in gold. So every dollar lift in gold, we get a 1.8 times multiplier on the post-tax MPV. Zinc, obviously, being a big revenue contributor, is 1.63 times. Copper less than half of 1 times. And then you can see on the expense side in lead and silver, small impacts. So what's going to move the needle on this project from a commodity price perspective is gold and obviously zinc. This was the reserve estimate that was used in the feasibility study. So again, 11.65 million tons in the pit. If you look at it on a gold equivalent basis, we're at 4.3 grams per ton. Grade on a zinc equivalent basis is 6.7%. And if you look at the resource estimate as a whole, so you look at the global resource estimate, which is in the appendix of the presentation, total resource is close to 18 million tons when you include the underground, and it averages about close to 2 grams per ton of gold and close to 3% zinc. Break down a little bit of the costs. So again, $294 million in capex in the feasibility study, includes $31 million in contingency. Operating costs on a gold equivalent basis, all in sustaining, we're at $677 an ounce. So we certainly think we're at the low end of the range in terms of cost for production. If you look at it just on a gold basis, so you're taking into account all the credits from the other metals, your net all-in sustaining costs are negative $171. Gross margins, again, just looking at other projects in this development stage, it's a high margin project. We're in that 80% gross margin range, so it fares very well when you compare it to some of its peers that are in the feasibility, this feasibility, pre-feasibility stage. The flow sheet, there'll be 2 sides to the plant. So there's an oxide leach circuit and a sulfide float plant. No real magic here. It's all pretty conventional processing. The throughput was 4,000 tons per day on the sulfides, 800 tons on the oxides. We are currently doing some metallurgical test work to try to improve our recoveries. To give you an idea, our recoveries on the gold side as a whole, so between both circuits, is 63%. So we'd certainly like to see those numbers go up. Our gold does not float very well. So in the sulfide tails, we're sending about 1 gram per ton to the tails. Just to look at this is a 3D model of the ore body. The gray shell is the permitted pit. And just wanting to show you some of the zones that we're targeting for future exploration. Again, the ore body is open at depth. You can see down here at 700 meters, the pit goes to a depth of 250 meters, but at 700 meters, we're still getting great grades, not part of the overall resource, but you can see LK 484, you know, we've got 31 meters of over 6 grams gold and 2% zinc. So we think this ore body has a lot to give. We just need to do more drilling. These deeper holes get more expensive. You need more of them. And so as we go forward, we'll continue to look to drill the ore body and add tonnage and mine life. We did finance, the last 2 years, we have financed all the activity at Aquila through a transaction we did with Cisco back in the fall of 2017. They invested $10 million by way of a private placement in the equity of the company, and they purchased a gold stream from us for $55 million. There was 4 tranches underneath that gold stream. We've drawn down the first 2, so we've drawn down 15 of the 55, and that's why I said at the outset we're still owed another $40 million under that stream. And the key terms are they're buying 18.5% of our gold for 30% of spot on a go-forward basis until we deliver 105,000 ounces under the stream, and then the stream percentage falls from 8.5% to 9.25%. So when you look at it on a pit-only basis, which is how we looked at the transaction, the implied cost of capital was slightly less than 6%. So value-creating milestones, a couple of check marks at the beginning there. We did obtain our wetlands permit. That was the final permit that was required back in the middle part of last year. We completed our open pit feasibility study and published it in September of last year. We're currently in what we call pre-construction phase, so we're moving forward with pre-construction, getting the site compliant with all the permit conditions. So, you know, monitoring wells, piezometers, et cetera. There's a lot of data that we have to collect before we can start actual construction. We have submitted for certain permit amendments. Again, this is just trying to sync the feasibility study design with the permitted design, and in Michigan, their mining law provides for certain amendments on a go-forward basis. We do have an outstanding legal challenge on the project. We had 2 groups that challenged both our mine permit and our wetlands permit. Earlier this year, the judge in the, it's called a contested case hearing. The contested case hearing for the mine permit upheld the permit and ruled strongly in the company's favor. The same petitioners are challenging us on our wetlands permit, and the hearing is being held this summer. The next session starts August 5th. And we expect the judge will make a decision in the fall. We continue to evaluate the underground mine and looking at expanding into the underground. Hopefully we'll have some news on that in the next few months. So we'll issue a PEA that shows the impact of adding the underground to the open pit. We're going to move forward next year with basic and detailed engineering. We'll continue to expand our owners team. How much time do I got? 2 minutes? And look to raise project capital and look at other potential strategic alternatives for the company. We have hired a financial advisor to help us with that activity, and that activity is ongoing as we speak. Again, 2 other assets that we own on this Pinokian VMS belt. Close proximity to Back 40, about 100 miles away. Both are within 100 miles. Bend is a copper gold project. It's underground, and neither one of these projects are 43-101 compliant, but most of the drilling at both these projects was done in the 70s, done by Noranda actually. And so Bend, again, it's a copper gold project, 2.7 million tons currently at 2.4% copper, 1.1 million tons at almost 5 grams gold. again, we'll look to continue to drill that in the future. We think it's a great asset and a good next generation asset for us. Reef is a gold project. It will be open pittable. It's near surface. Small deposit, again, 43101, not 43101 compliant, but it's currently historic resources at 412,000 tons at almost 11 grams. And again, we'll continue to add to our leadership team as we go forward, as we get closer to putting a shovel in the ground, and that's it. Thanks.